Hello traders, welcome back to another episode. This one is a bit different from the previous episodes we've done. Today I'm going to share with you how I plan my trading, or rather my trading plan. And I normally ask traders, what's your trading plan? Or when people come to us and they inquire about our trading plan, often what people deem to be a trading plan is a trading strategy. So a trading plan is not necessarily what and where you plan to buy or sell the markets. No, that's a trading strategy, which is an element of a trading plan. A trading plan is more like a business plan. So it entails, how are you planning, or rather you could even look at it from what is your career plan. Then from your career plan, you can break it to your business plan. And from your business plan, you can now have your trading plan. In that, these things have to add up. You need to show me how A plus B is probably going to equate to C or D. Okay, so I don't call mine a trading plan. I call it a playbook for winning in the markets, because within the plan there are a couple of plays. If you think about a playbook, it's a couple of plays, a couple of things that you can do for you to win in the markets. Definitely I start off with objectives, and that's what I'm going to speak to you about. So for me, I look at trading again in the form of not monetarily, but primarily in the terms of what are the key performance indicators. And I have developed 3 performance indicators for me. The first one being, how good am I at picking winners and avoiding losers? Or rather, how good am I at knowing when to trade and when not to trade? Or rather, how good am I at knowing when I'm wrong and knowing when I'm right? So all that boils down to something called your hit rate, which is out of 10 trades, how many will make money, how many will lose money. Now, the second variable that I'm looking at is the R multiple. Now, what is the R multiple? The R multiple is, what is the relationship between my wins and losses? Now, yes, I have this number of wins, I have this number of losses, but what relationship do they have? How many wins do I need for me to recoup my losses? Let's say if I have 3-4 losses, how many wins do I need? What are the R multiples that I normally get in the market? And for me there, my objective is to just attain a 2R multiple. Meaning, if I'm risking $100 and I'm up $200, $300, I'm very quick to come out of that trade. I don't stay in the markets for so long. That's not a strength I've developed. But I know I can be in and out multiple times, and that's a strength I've developed. So I focus on my strengths and try to avoid playing around my weaknesses. And then the third variable that I have is efficiency. And efficiency is how well are you at executing your plan. Often traders have very profitable systems, but due to poor execution, they don't make money. Same to how businesses fail, same to how, people often know what they need to do for them to succeed, but people don't do it, so they fail out of poor execution, not rather a lack of ideas. So I just have those 3 variables. And if you look at my first variable, it's a 50% hit rate. So if you've looked at my previous accounts, I'm somewhere there, at least I'm right between 55 to 65% of the time, depending on the accounts that I have or the trades that I'm taking. Then the second variable I'm looking at is the 2R multiple. There I still need to do some work. I have not attained a 2R multiple precisely on most of my accounts, so I'm still working on that one. And then to attain 80% in the execution of my playbook. Now what that means is, out of every 10 trades, I only want to make a mistake on 1 or 2. I don't want to make a mistake this trade, the next one, the next one. I am aiming on reducing human errors. And human errors are more or less psychological errors. So those are the 3 variables that I'm watching. How often do I deviate from my plan? How good am I at picking, winning and losing trades? And how good am I at cutting losses and staying with my winners? Those 3 things are the ones that I'm watching out the most now. And the key results for me to that means that I have to follow my trading plan on a trade-to-trade basis. Now, what is my risk management? So my plan often starts with risk. Remember, survival before you thrive. So if you can't manage risk, you can't make money. You have to manage risk for you to wait for those few times where good opportunities exist so that you can make money. So risk is the most important element to manage as a trader. And there are a couple of risk management rules. Number 1, never expose more than 3% at any one time or in any single week. Number 2, always know where you stand. Always know where you stand. At any single point, you must know how much money is at risk. Any single point. Number 3, always use stops, and you should never move stops. And number 4, never average losers, losers average losers. Those are my rules. So even if you wake me up at night, I always know how much is exposed. I always know where I'll get out before I get into a trade. I never add into a losing position, and I never expose more than 3% in a particular week. Now, what are the position sizing models that I use? So remember, there is the position sizing and equity model. So I normally risk between 1 to 2% per trade. Nowadays, I'm a bit courageous. I might go to 2% in some accounts, but often I risk 1.5, depending on how well I'm doing in the market. So this helps me survive in the markets in the long run, which is very, very essential. Then the equity model I use is reduced total equity. That means if I have two accounts, if I have 2 trades exposed, and I'm risking 1,000, I won't risk, let's say I have $100,000 account. If I take 2 trades, I'll take at 100,000. A percentage, it will be 1,000. That means I have two trades which are at $2,000. If I was to take a third position, I won't take it at 1,000. I'll take it at 980 because my equity has reduced. So those are the models that I'm using. I'm floating with my equity up and coming back down with it as the markets are moving. Now that's on my risk management element. On the system analysis, I'm looking at, I trade a trend following strategy. So the objective for me when I'm trading is to collect as much data about my system and to update it. And I have a process. So I tend to believe that a trading process has 3 parts. What do you do before you trade? What do you do during trading? And what do you do after trading? So if you don't have those 3 factors factored in, you're still missing out. So looking at potential opportunities, so I do my idea generation during the weekend. I use the top-down approach, which for those guys who have attended my course, you know. And the objective there is to try and identify high probable potential setups for the week, you know. I'm preparing or planning for the week so that I know as I come into the week, these are the trades that I should be watching out for. These are the trades that I should be avoiding. Now, the daily trading process, I have the early morning check. That is before London Open. So before London opens, I have to, check where markets are. The objective is to understand the pivotal levels of the day. Okay. So to stock probable setups, patterns, or entries which can be executed as you wait for session transitions. So that is the early morning check. Then after that, we'll have the 30 minutes before London. So preparation for the day. At this point, we are there preparing for the day. How will the day be? Which markets am I anticipating? What levels of the day am I looking at? Then I'll have the first hour of London, quite volatile. So I want to see how price opened, how has London opened. And then I'll come in at around 2 p.m. to 30 p.m. preparing for New York. New York starts at around 4:30. 4:30 we come in, start New York. Now, New York will start at 4:30 or 5:30 depending on the time zones. And then I'll do the last review, which is I'll do it around 9-10 a.m. to just p.m. To just look at where prices are closing, where price is closing. What does that tell me about today's price action? Should I be long? Should I be short? Should I pivot? Should I wait for something? So I'll do my daily review and then I'll go to bed. Now, the markets that I trade, primarily I'm looking for 4 pairs. So gold, GBP, USD, Euro, USD, Aussie dollar. That's where I'm focusing on. And the setup and pattern that I'm trading is the 3-drive pattern alongside other confluences, which includes the fair value area and quarter levels. It's a 2-hour multiple setup, and the entry variables that I'm looking at are the 3rd trendline bounce, quarterly level as a confluence, pivot point must be present, and the top down must be in line. Now, my execution time frame is specifically on the 4-hour time frame. And please don't try and copy this. I'm sharing with you this so that you can go and ask yourself, what pattern am I trading? Answer that question. What entry variables are you watching? Answer that question. What exit variables are you watching? Answer that question. If you try and copy and paste what I do, there is a lot that goes into decision making that it will still be hard for you to make money because this is not your original work. Okay. So top down, I'm looking at markets to be trading between fair value R2S2 and avoiding markets which are trading in extreme valuation levels. So if markets are overvalued or undervalued, I don't touch those markets. I stay away from them. Then I have exit variables, what takes me out of the market. And if you've observed my trading, it's not static. I'm not static. I don't say I'll come in here and I must get out there. No, I play around the rules. So for example, my stops come in categories of things. So the first stop is close to S1 or R1 depending on the direction. another one comes with the break of structure of the market, and another one comes after the next quarter level structure. So if any of those things start happening, I know probably I'm wrong. On the flip side, when I'm looking for money on the targeting side and I've made some money, I'm looking for R2S2, I'm looking for quarter level around it, and I'm also looking at session transitions. Now, what I mean is sometimes when London is starting, I might decide to exit a position as we head towards New York, because I realized the session that was what happened in London was in my favor, and I don't expect that to continue in New York. So I probably expect a pullback, a correction, a complete change of trend direction. And when that's the case, then I quickly pivot to the other time frame or the other session. So that's also very, very important for me. Then recently I've been learning about the flag pattern. It's a correction pattern. I'm still learning more about it. I'm developing variables, and you can see even in my plan there's a list of things that I need to answer for me to come up with a clear pattern around it on how to trade it. Then the last one is managing oneself. How do you plan to make sure you as an individual don't interfere with sound decision making in the market? How do you ensure that your personal drama does not come into the market? Because your personal drama could easily come into the market. And for me there, I'm paying attention to consciousness or awareness. So using the CBT, learning the art of mindfulness as a psychological skill through meditation. And how I do that is, I think for those who have attended our course, the CBT worksheet. For those who know about meditation, you can do more research. So every day, I try and do mindfulness meditation, just to make sure that I'm practicing some of these things. I'm making sure that I'm learning them. And then the top trading rules that I use is never execute more than 3 trades in a week. Execution should only take place on the 4-hour time frame. Focus on following the direction of the trend, and focus on your before, during, and after trading process. So objectives: consistency in executing my plan, working on myself, avoiding executing subpar trades. Subpar trades are trades which are not the best of the best. They're not A++ trades. So you must look for A++ trades if you're going to make money in the markets. So make sure you're able to place yourself in a position whereby you're going to make money. And then I avoid interfering with trades after execution, and I only execute setups which have adhered to my criteria. So these are the ones that are just a repeat of what I was talking about up there. So you can at least go back. Then the last thing that I'd have is I have a couple of rules. I have my rules. I have my trading rules. What are your rules for idea generation, for example? I don't start trading unless I've done top-down approach. I've looked into the fundamentals, and I'm only looking for a specific thing. Okay. What are my rules for entry? I only execute after the signal. I'm paying attention to particular zones for entry. I never expose more than 3 positions at a go. I try and execute my sessions, my positions as sessions are starting or ending. And I always use a journal to record what I'm doing, Rules for exit: I don't move stop losses. So on the stop loss side, I never joke. I always know where I'll exit in the stop loss side before I enter. And even in the profit side, okay? For position sizing, I have my rules. For trade management, I have my rules. For managing emotions, I have my rules. For ensuring discipline, I have my rules. For managing risk, I have my rules. And for journaling, preparation, and planning of the trading day, I have my rules. All that is what goes into a trading plan. If you have a trading plan that does not tell you how you'll manage yourself, you're missing out. If you have a trading plan that is not telling you how you'll manage risk, you're missing out. If you have a trading plan that is not specific on what you're looking for in the charts, you won't make money. And if your plan is not defined by a before, during, and after process, probably there's a lot you need to update in your trading. So I'll stop there for today. That was a brief class on what should be in a trading plan. If you're interested in learning, about crafting better trading plans and what you should pay attention to, consider giving us a visit, reach out to us, watch our content, try as much as you can to learn something out of what we do and out of what we're sharing with you guys. So with that said, I'll stop there and we'll catch up with you guys next time. Peace.